Giving you guys a little update on trades that I've just done, and I want to get into this spreadsheet that I use to track every single trade that I've been doing since May. This is when I've pretty much gotten the spreadsheet, and I want to show you guys how to identify oversold stocks, how to identify what stocks you should be entering trades on, and what stocks maybe would not be a great idea to enter trades in. So let's start with the portfolio update real quick. Get into Google. I did close my Google puts that I had, and I have resold new ones as well. So sold these for a $864 credit, bought them back for $264. So made $600 there, and then I used the majority of that capital to sell some Oscar Health puts because the premium was very nice and it was very safe. And then I also used the remaining capital that I had left in the account to sell some Google puts very far out the money. These are like $21 out of the money right now, and just to collect another 96, so that capital wasn't just sitting there. All right, so let's go to Oscar Health, see what I did there. Oscar Health is, wow, up almost 10% right now to $15. As you can see, I have sold 67 $11 puts and 14 $11.50 puts. Used about almost $90,000 of capital. My total return is $648, and these are all $1. So since I have 81 contracts, I have 81 more dollars to make. And unfortunately, these contracts go in basically increments of 5, so I wouldn't be able to just buy them back for 1. I have to either buy it back for 5 or wait for the expiration, and I'm gonna wait for the expiration because buying it back for 5, I would lose a lot of money doing that. So I guess I'll just collect the $81 remaining. All right, so that is a quick portfolio update. We are actually green today while most of the market is red. Oh, looks like the S&P 500 is actually coming back, which is cool. We also have crossed the 10% year-to-date goal that I have. I want to make it to 20% hopefully by end of the year. 25% would be amazing, but 20% I'm laying down as my baseline goal. So we're halfway to my baseline goal, and crossing that double-digit year-to-date return is awesome. All right, so let's get into how I identify stocks. My favorite two indicators are the RSI and the Bollinger Bands. We're going to start with the Bollinger Bands. All right, so Bollinger Bands are very simple, very, very simple. If the stock goes out of this highlighted area, it is not going to be out of there for a very long period of time. Okay, as you can see, it pops out for 1 day, 2 days, and then third day it's already back in. Here, 1 day, 2 days, and 3 days is back in. And it happens pretty much every single time. So if it gets out, it usually gets back to the white line. It goes out, comes back to the white line. It goes out, goes down, comes back to the white line, down to the white line, down to the white line, up, back to the white line. So as you can see, it pretty much bounces between the bottom to the white line and the top to the white line. So the white line is basically your middle zone, and the bottom Bollinger Band and the top Bollinger Bands are your spreads pretty much. The stock will trade in this highlighted area 95% of the time. It's 90 to 95% of the time. So since I seen Oscar Health was towards the bottom of the Bollinger Band, I sold these, I think, when the stock was like around $13.50, maybe something around there. Anyways, if you look at the bottom Bollinger Band, it is $11.66. The top is $21.85. So I sold my puts below the bottom because the odds of it going underneath the Bollinger Band are very slim to none. And on top of that, it's already been beaten up a lot. So I felt pretty confident, and plus, my puts are at 11 and 11.5, $3 to $3.50 out of the money right now. So very, very safe. I mean, Oscar Health would have to fall like 30% this week, and they don't even have earnings this week. They have earnings next week. So That's another reason why I did this trade. It's already been beaten up a lot, and I didn't think it could basically be beaten up much more or go underneath the Bollinger Bands. All right, and then let's get into basically RSI. I use Webull for RSI, and I use Yahoo Finance for the Bollinger Bands. Oscar Health. So the RSI when I was selling this was around 36. It was right down here at 36, which is almost oversold. It was overbought, and then it came all the way down to 36, and I was like, well, it's close enough to being oversold, so that even gave me more confidence to sell. So we're close to the bottom of the Bollinger Bands, and we're close to being oversold. Those are two indicators that I like to use to sell my puts. And Oscar Health is having a whopping almost 9.5% day right now. Absolutely killing it. So this trade is going in my favor very, very well so far. Unless Oscar decides to drop, 40% or 30% over the next couple of days. But is doing very well today and doesn't have earnings till next week. And I believe they just raised their guidance. They were supposed to come in with like 11.2 billion this year, and they just raised it today to 12.2. So that's very, very good news, and I guess market likes that. So that's RSI and Bollinger Bands. This is why I went a little heavier. This is why I used $90,000 of capital. The premiums were very good. Implied volatility was around 160%, and it's a stock that has already been beaten up. So the risk to reward was in my favor, right? Could it keep getting beaten up? Yeah, it could. It could definitely go oversold. It could definitely go into the 20s. But I did it $2.50 out of the money at the time, and I felt like that was very, very conservative, right? Very conservative, especially for a $14, $15 stock. So, and I have Google trades, which, as you can see, it's been trading in this range for a while. RSI on Google right now is 73.5. Pretty high. Google is definitely overbought right now. That's why I mainly closed these trades, is because I noticed Google's RSI was big. That's why I took that $600 profit right there. And I was wondering what I should spend my extra, I think I had, 40,000 or something. I was looking for something to put that capital to work, and I couldn't really find anything. But I know Google's has earnings coming up tomorrow, and I decided to do a very safe. I did 170, so that would be down here, basically at the bottom of this trend line. So I have a support right here of this trend line, and it is $21 out of the money, which is awesome. And then if you go to the Google Bollinger Bands, it is very close to the bottom of the Bollinger Bands. It's down here. So I feel very comfortable, and plus Google is a stock that I wouldn't mind owning at a significant discount that I've sold the puts at. And as you can see, Google's is breaking the top of the Bollinger Bands, which is not good if you're, it's not good if you're a bull, because usually when it breaks, it comes back down. Breaks, comes back down. So I could see it coming back down maybe to the white line. If earnings are good, it could break for 1 to 2, maybe a third day, but then it's coming right back in the Bollinger Bands. So the Bollinger Bands might start to curve up, definitely. But I sold mine way down here just to be safe, just to make an extra small bit of premium for the week. But Oscar Health was my really big trade. After I closed out those Googles, this was my big trade. Let's get into the spreadsheet, guys. I really want to go over the spreadsheet with you guys. This is my second time recording this video. I recorded it earlier, and I'm pretty sure I jacked that up because I usually don't record on my laptop, so still kind of familiarizing myself with this. But since I mainly sell in the money calls, this whole side represents, we'll use Amazon for example, okay? It represents you have to buy the shares outright wherever the stock is trading, and Amazon at the time, it was trading at $225.34. Then I sold an in the money covered call because this was in the money at $2,225. That represents a net loss of $1,704 because I did 600 shares. Now, if we scroll down to, where is it at? I think it was this one. This was when I sold the 222.50 covered call, 6 contracts because I had 600 shares. It netted me 1968. So we netted 1968, and then selling them we lost 1704. So that is a 264 net gain. And this was actually the second covered call. At first I sold it at the money, slightly in the money, but it was at the money right here. This was the 225 covered call, but I wasn't sure if my shares were going to get called away, because the whole point of this is you want your shares to get called away and you want to gain that little premium. This was a little more riskier. I made 690 and I went ahead and closed it out because I wanted to sell the 222.5s because it was a little more safer and I would feel a lot more comfortable that my shares would get called away. Turns out it closed at 226 that week, so this would have actually worked perfectly fine, and I would have probably made another $1,000 on this trade. But I wanted to play it safe and all that, so I let this expire, collected the 1968, and sold it for that. So that's basically, when you do in the money, you're selling it for lower than you bought it, which represents all these negatives. And then over here, these really big ones, that's from the covered calls of in the money that I'm selling. That's why you have these really big ones over here. So they basically cancel each other out, and then I have a small net gain. All right. And then also, when I sell a put, I just basically how many contracts I sold, what was my average gain, like average was $16.87, and then I bought them all back for $1. And that gives me a net profit of $1,000. And the LCs are my long calls. These are like if I buy a call option and then sell it. Bought it for 21, sold it for 22.20. Did that with 3 contracts, made 360. So, yeah, this was an accident. This one, I thought I was going to be buying the contracts back for $5, and I did not put the limit thing on there, and it bought them back for 10. It was just a simple mistake I made this morning, but ended up taking a $25 loss on that. This loss was because I rolled the Amazon. I rolled that 225 down to the 222. I think. No, this was the short put. Oh, so I rolled the covered calls down and I rolled my puts down. I had 222.5 sold puts and I rolled those down to 220. So I had to take a small net loss here. But as you can see, when I redid it, I made all that money back. And this was just a bot call that I did that lost $20 on. But for the most part, everything's been profitable. And this is the month. So this right here on the top is my total return since I've started tracking this in the spreadsheet. We've basically started since May. May I made 2.9% for the month, or $3,600. June we made 4%, which is exactly what I'm trying to reach. 1% a week is my goal. We made $5,100 in June, and in July we're at 6.1%, and pretty much this is the last week. The next week is August 1st, so that's gonna fall under August 1st right here. But yeah, this month we made $8,100, so pretty much half of this came from July, which is insane to me. But yeah, this is pretty much the spreadsheet, and I love it. My friend Matt made it for me, and it is amazing. It's basically how I'm gonna track everything, and he's gonna be doing this in the money strategy with me very soon once he gets his capital lined up and liquidated. But this is the spreadsheet, and yeah, guys, this is the portfolio. I think we're up 1,000 since our last video. But yeah, everything's going good so far, man. Everything is going awesome. Ready for all these puts to expire worthless. I might buy the Google puts back on Thursday morning once Google's earnings come out, because this should pretty much get obliterated with IV Crush. Hopefully to like, $1, $2, or $3. I might buy it back so that I can get my capital to sell puts for August 1st of next week, once I find a good company. And I switch to a cash account, so if I have any like buying power available, I can earn 4% on it. Since the market's pretty overbought right now and everything's pretty much at all-time highs, I'm not wanting to go too crazy into stocks right now or into trades. Playing it very, very conservative, very safe on these trades. But yeah, I think it'll update tomorrow, and I'll have $95 earning some cash. But that's the portfolio, guys. That's the spreadsheet. That's how I use the Bollinger Bands and the RSI. If you guys need any more, help how to use the Bollinger Bands, how to set them up, how to use RSI, how to set it up, or anything like that, please leave a comment. I do not mind making another video in depth on certain things. But that's the end of the video, guys. I hope you stayed, hope you enjoyed it all, and I appreciate the support. Peace.